Welcome back. Households in New South Wales, Queensland and South Australia will see electricity prices up to 14% this year after a determination today from the Australian Energy Regulator. Business Editor Ross Greenwood joins us. Ross, what's the justification for these price rises?
Well, the justification is that there's been outages in coal-fired power stations, and as a result of that, the wholesale price of electricity has been higher, and so that's going to then be passed on to consumers and to business customers as well. So these are people who basically are on the regulated prices. You can see here in New South Wales, depending on where you are, it's going to be a different price, and it's broken down by the Australian Energy Regulator. But here in New South Wales, you can see between 8.5% and 14% increase in prices. In southeast Queensland, prices will rise for electricity for regulated prices by 11.3% and in South Australia by 7.2%. Now, the Australian Energy Regulator explained these price increases because quite clearly they're well above inflation, and says basically that wholesale costs for retailers have risen by 41% in New South Wales, 49% in Queensland and by 11% in South Australia due to reductions in thermal generation. In other words, we're talking here coal-fired power stations, resulting from unplanned outages and higher coal and gas prices. So one of the other problems that you have for the electricity markets in Australia right now is the shortage of gas on the East Coast. Gas is supposed to be one of the interim energy sources to generate electricity until you get enough renewables into the grid. The problem is right now that gas prices are rising also as a result of these shortages, and that's leading to higher electricity prices.
Right, OK, so a few headwinds ahead. Not only that, Jim Chalmers, the new Treasurer, said higher inflation, higher interest rates will cause real challenges for the Australian economy. At the same time, China's Premier says its economy is facing greater difficulties than during COVID in 2020. So it's another challenge for us, Ross.
Yeah, so we've seen the lockdowns, and this is a fairly blunt and frank assessment from the Chinese Premier Li Keqiang. Now, normally you would imagine in China that they're trying to pump up their economic growth prospects. In fact, even this year, and this is Li Keqiang giving this testimony yesterday, where he really was very, very blunt about the fact that China is slowing down as a result of the lockdowns that have hit most of its major capital cities as it's pursued a COVID zero policy. Now they're trying to get the factories back and operating, getting capacity up and going. But the real problem is that China these days is largely driven by retail demand. And while retailers are locked up effectively, and so are their customers, really you don't get the growth out of China. And so there was a statement out from Li Keqiang, the Chinese Premier, which basically says since March, especially since April, some economic indicators have apparently declined, with difficulties greater even than the shockwaves brought in by the outbreak of COVID in 2020. Now, originally, China's economy this year was expected to grow by more than 5%. Then those forecasts were downgraded to somewhere in the fours, mid 4%. Now it's likely that maybe China, like other parts of the world, as a result of rising prices and a lack of economic demand, really could even be struggling to even break even. The other point also about this testimony was the encouragement of the various states of China to start to stimulate the economy, to really get people to get out there and start spending again as they come out of these lockdowns.
All right, well, all that said, this doesn't seem to be denting the confidence of some Australian companies. There's been a $1.2 billion takeover launched today for one of Australia's tech darlings, Appen.
Yeah, so there's a whole bunch of tech stocks here in Australia that are known as the tech darlings. So there's WiseTech, there's Appen, there's Afterpay, there's Xero. These were known as the wax stocks in Australia. Afterpay's already gone. It's been taken over now by Block, Square. Now Appen has received a $1.2 billion offer from the Canadian company TELUS. Appen is a data company. TELUS has got a similar type of business, which does a lot of work in particular with languages and with emerging technology companies. This is a pretty big increase. So I'm just having a quick look here that the price of Appen shares this morning on the market have jumped 31% off the back of this takeover offer. It's not a guaranteed takeover offer. They're simply opening up the books to TELUS to effectively see whether a takeover bid will come. But that particular takeover bid today on the market has led to the ASX 200 in early trading being up by around 8 points. So it's a reasonable start to the morning on the stock market today, all things considered.
OK, Ross, great to see you. We'll check in soon.